Welcome back to the channel. We're going to look today at a stock called Rush Street Interactive, ticker RSI. What these guys do, they operate an online casino and sports betting company in the US and Canada, and most recently expanded to Mexico and other parts of Latin America. So they provide real money, online casino, right? And sports betting, as well as other types of gaming services like social media. On top of that, they offer a full suite of games comprising bricks and mortar casinos, table games, and slot machines. So, what's been happening with the company? This company started initially at inception focusing heavily on technology development, and it has transitioned now to a gaming operator through tech investing. If we have a look at the chart, we can see that this guy chose a very good time to IPO, right? Right at the start of the recovery of the initial pandemic crash, and then did very well. Then up until 2021, where they struggled a little bit, and then they recovered at around the peak of the market again in late 2021 and suffered massively during the bear market. But as we can see now, the stock has improved dramatically, right? And it's well above its all-time lows at about a couple of dollars. So now, as a matter of fact, it's trading over 13. If you look at this recent behavior, this looks to me like a bull flag. So the stock could continue to perform quite well in the near term. And why is that? Well, we have to bear in mind a few things. First of all, during the 2021 and 2023 period, right, which is this period here, the company was expanding into new markets, right? And of course, that requires significant investment, not only in the technology, but also in business development. So, uh, establishing that base that they can build a business on. But actually, in 2023, which is where we start seeing the recovery here, right? They achieved profitability. They became EBITDA positive ahead of schedule. And ever since, and that's what is justifying this performance over here, they have managed to successfully balance growth with profitability. So let's have a look at the actual valuation. The valuation has been coming down, still at relatively high levels compared to its sector, which is currently selling at about low 20s, right? So these guys are definitely at a premium, but the valuation has been getting a lot better. And that is a result of management achieving those profitability outcomes. So um, overall, a lot of things to note on the positive side on the quants. So we have, for example, Q3 2024 revenue up 37% with EBITDA of 23 compared to 21 in the year in the quarter prior, right? So we're talking about big increases on both top line and bottom line. Now, I have been looking at the online betting sector for a while, and there are very interesting companies as well out there, like DraftKings, DKNG, where I recently took long positions and booked some profits. And the interesting thing for me is that the market doesn't seem to be prepared to pay as much for Rush Street Interactive as it is for DraftKings. And I think the reason for that may be that DraftKings is a little bit more established, right? So DraftKings has been doing pretty well recently. They've benefited massively from the Tyson and Paul fight recently, but there is a substantial differentiation between the two. It's more than double. So we might be seeing the market not quite prepared yet to pay such a high multiple as with other operators, perhaps because of that scale. Let's remember that this company is just under 3 billion, but I do think that it's going to be a strong name in 2025 as other competitors have been. Overall, the company has been um, on a very interesting journey. First, it focused heavily on technology development and having their first major market entry between 2016 and 2019 in regulated markets, with Pennsylvania and Illinois being the initial markets. In 2020, they go public, so that provides capital to fund their expansion. Then they expand into multiple US states. They expand into Latin America and Canada and Mexico. And now we are seeing, as I said before, the results of that. So where do we go from here and why now, right? So the company, let's not forget, they're very good at what they do. They're very focused on building their proprietary systems and establishing their presence, right? I do think that there's potential out there for them to do so, but at present they're still very focused on the online casino that they offer, and it's a relatively limited product suite compared to what they do, and that's what I think is interesting about the story of the stock down the line. So it's good that they have this growth, they're profitable, they're efficient, and they have also decreased their marketing costs. But at the moment, they have only an online casino game and a sports betting company, right? Um, Now, what happens when management, which, like I said, has been performing pretty well, starts um, addressing new state markets like New York, and also they engage in product innovation. So they're working on launching new features, but also have the benefits of a solidified infrastructure that they have built in order to reap those rewards. Well, that definitely is something that is a catalyst for the stock price to go up. We'll probably see that in future earnings reports. And at the same time, they are considering entering new venues as well, so new verticals, right? So that goes for example, stadiums, includes all the types of um, environments that they are targeting. So that's all down the line, but management has expressed a view in targeting those areas down the line. And of course, the probability, the appetite for M&A is there too. Okay, so that's all about the tailwinds, which is all in good. But there are also some risks and headwinds, of course. So first of all, with this type of uh, business model, regulatory changes are one of the main risks. It's quite unpredictable, and we could see headlines of a particular state or particular legislation coming in place that represents a disruption in the near term for these guys. Not particularly concerned about this due to the Trump administration, which is said to be quite open and not very pro-regulation, but it's certainly something that could happen on any given state. And of course, competition as well is another key factor. I mentioned DraftKings before, but there are many different players. It's a sector that is constantly evolving, changing, and expanding. So that's something that we have to keep an eye. At the same time, I do think that this sector is quite hot at the moment, and that's what's at the same time helping propelling the stock further. Um, so in terms of the company itself, the operational performance has been pretty good. I'm just going to show here very briefly some operational KPIs that I extracted from their transcripts. And we can just have a look really at the charts where we can see that the monthly active users continues growing at a steady pace, less so in Latin, but again, it's relatively new territory for them, right? And then the online revenues um, keep increasing, which is all good. But also the customer retention is pretty good. Overall, on the operational side, everything looks pretty healthy, and I think that there's room for the stock to achieve in a few months, perhaps 15, 70, $20 mark as we do so. Now, earnings are not going to be until February, and I'm not going to be taking a position immediately on this. I think the timing is not quite there yet. If I were to do that, I would probably be looking at buying the Aprils and selling the Jans. But again, I'm not going to be taking a position for the time being, but it's definitely something I'm going to keep on my watch list. Hope you enjoyed the video. See you soon.